Hey friends, Ernie here from the Trader of Futures, here to give you my special flavor on Bitcoin analysis. And my special flavor is I have skin in the game. What does that mean? It means that I'm materially involved in this market. Now, a lot of you people may think otherwise because I've been so critical of Bitcoin and the technology and the market and all the other YouTubers. And yes, that's exactly right. I have been critical. Would you rather me be thinking that everything's going to be roses all the time? How can I give an objective viewpoint with that kind of mindset? How can I give an objective viewpoint if I don't actually have skin in the game and I want to protect what I have? There is nothing more important to me than to preserve the capital that I've gained. And nothing more important to me than to identify those things that might take away that capital and identify only the best opportunities to make profit. And that's what it's all about. This game, some people tell you, oh, it's all about the technology. Bitcoin and blockchain are going to change the world. Well, that's all fine and good, and I kind of believe that somewhere down in the future, but it ain't now. Right now, it's all about making money. How do you make money? How do you make money? You make money by having skin in the game. And you know what? There are people out there that I know for a fact that don't have skin in the game, yet they're getting an audience. And for what? I'm speaking of Tone Vays, just watching a video of his, a live stream, telling me that he doesn't even trade. And yet he's teaching people at the cost of 0.1 Bitcoin in his seminars. 0.1 Bitcoin, $800 or $1,000. For what? For someone who doesn't trade. And he says he lives frugally because he doesn't have a family. He doesn't have any obligations. He has nothing. He's not caring about making money. He's too busy flirting around. Well, I do care. I have a home in one of the most exclusive neighborhoods in one of the most expensive towns in Massachusetts. I have kids that have gone through college and paying their loans. I have businesses that I have to support and cash flow. I've got skin in the game. I need to make money. I've got obligations. Who would you rather listen to? Anyways, back to the charts. All right, so we had this temporary bounce off the bottom, or another bottom, and people are getting all excited. Oh, we're back! We're back! Not so fast, bucko. We're not back. Listen to and watch what is happening. All right. Currently, we're in this very large balance, and we're making our way through it. There's still a lot of downward pressure. There's still a lot of commitment in this area. It's going to be very, very difficult for us to move up unless there is some kind of material change in the sentiment of the market. And make no mistake, what is it that drives this market? It is the prevailing sentiment of all the people that are in there, whether or not they believe in this or not. And that feeling, that belief, ebbs and flows. And our job as traders is to analyze that the best we can. And the best way to analyze that sentiment is with the commitment that those people, those traders make to this product. And how can you tell what their commitment is? Well, it's the material stuff, the money that they put into it. And what does that show up as? It shows up as volume. And that volume pushes price up and down. It's so simple, and it's one of the main reasons why I do volumetric analysis and use volume profile. I also use tools like Market Delta looking at footprint, and I'll go over that at some time in the future. And it is the most effective way to read the sentiment of the crowd. Looking at TD sequence and Fibonacci numbers and moving averages, it's all bullshit. They are derivatives of one essential thing, and that's the data stream that is coming through to your platform. That data stream contains three basic pieces of information. It is time-based, so time is one. And in that is price and volume. Time, price, and volume. You see on your charts, you see that represented in a time-based chart, mostly, as time and price moving up in a time-ordered sequence, and then sometimes you'll put volume down there and look at that as well. There is one other fundamental way that you could look at that data, and that is eliminate the time aspect and just look at price at a particular volume, or volume at a particular price. So now you have three fundamental ways of looking at the data, non-correlated ways. If you're looking at that same data and trying to use a TD sequence, a RSI, a MACD, any of those indicators, they're all based on the same stuff, price. So how can you have price and then an indicator that's based on price and think that you're going to get something different, something unique? You don't. You're just getting a different way of looking at the same thing. It is not telling you what is actually happening. Non-correlated data sets and looking at their relationship is the statistically significant way of determining where things are going and what is happening in that market. Reading the sentiment, understanding where that flow of sentiment is coming and going. That's, in my view, the most powerful way to look at the market. And why do I choose? Look, it's not like I just made that up. I've been trading for 30 years. I've been professionally trading for the past 10 as a futures trader and built automated systems for the biggest hedge funds and investment banks, provided technical guidance to these companies as well. I've been materially involved in how the actual exchanges on the markets work. I have skin in the game, unlike some other jamokes on the YouTubes. So who are you going to listen to? Someone who is actually trading millions of dollars with skin in the game and his reputation on the line, or someone who doesn't have a care in the world, that's collecting 0.1 Bitcoin to tell you all about his made-up technical analysis thingy that he created out of thin air, that has no experience or skin in the game. Anyways, let's talk a little bit about volume analysis and volume profile. So this kind of goes back to what I was saying before. Now, I have dealt with the actual data that comes from the exchanges and developed and helped companies develop systems to push that through, that gets fed to all the major investment houses and hedge funds and publishing sites, everything. So not only do I understand this, but I've been materially involved in actually creating the data that you actually see. So as I said, asset data typically available to the trader is made up of price with respect to time, volume with respect to time, and then you can have a derived set, a unique set of volume with respect to price, which is called volume profile. There are no other unique visual data sets that can be derived from those three fundamental pieces of data. I guess one could argue that you could also look at a 3D representation of volume and price as it's sliced up in terms of time. And that would be very interesting. But you can do something very similar to that on a TradingView chart or many other systems. So volume profile, what is it all about? The market is an auction. It has buyers and sellers that are trying to come to some conclusion over what is actual fair value. Just like an auction that you would see, with the guy with the gavel and talking really fast. You have buyers that are going back and forth over price. But that's a one-way auction. In the market, it's a two-way auction. We have people that are haggling over that price, trying to figure out where fair value is. And when they finally do find what they consider fair value, they make a transaction with a certain amount of volume. And that is confirmation of value. That is what it's all about. A transaction where you have a buyer and a seller with a certain amount of volume, that is confirmation of value. And that's what they're really trying to come to. Where is value in the market? So another very important aspect of analyzing markets is understanding how they're actually structured and how they move. And the market moves in one of two fundamental ways. Either it is trending, trying to find value, or it is consolidating around a particular area where it has found value, or trying to sort of zone in on it. And when it's trending, it spends about 30% of its time in that trending motion. That's where it's going from one value spot to another, trying to find it, searching, low volume, sometimes even higher volume, getting it initially pushed, and then trying to find that next area of volume. And then once they find that, they haggle back and forth. They go through that auction process. So, and there are certain principles, and if you started analyzing this, you would see certain patterns evolve from this. And I've talked about these before, the volumetric principles. High volume without any kind of advancing market, after it's trended, typically indicates a reversal is about to come. So in other words, if we are trending, and then you find a spot, and then all of a sudden price stops moving, yet it results in very high volume, then there's typically a reversal in the cards. If you move to an area, and apparently there is some value there, and you start moving back and forth, but the volume starts decreasing, that is an area of consolidation, and you can be pretty sure that we're going to hang out in that area and initiate that market auction and try to establish exactly where value lies. And the place where it finds where the highest amount of volume is, we call that the point of control. So there's an anatomy to the volume profile. The actual thing that you see on the side of your charts, actually it'd be on this side, right? There's a thing called the balance. And the balance is any area where you see like a bump like this. Actually, if I'm looking at the volume profile, it'll be like this. All right? That bump represents essentially a distribution of volume at specific prices. And if you have any statistical background, then you probably understand normal distribution. And that's basically what it's based on. There's an area of that distribution of prices, that balance, that we usually mark off with a darker color. And that represents 70%, or approximately one standard deviation, of all the volume at various prices within that balance. All right? Now, why is that important? Well, it's semi-important in that by understanding that that's 70%, we can make some predictive conclusions, that price will tend to stay in 2/3 of that area. That's where it's kind of bound to. And you'll see that price will tend to move very heavily within that area. Then, of course, there's the point of control. Like I said before, that's the area of highest volume. And then there are the low volume wells. In between each one of those balances, there's a well of low volume. Those are areas where the market has, for some reason or other, found that there's very little value for them. Don't know why. There could be a number of reasons why. It could be just sort of this mass herd mentality. But price has a tendency to either come to that and then bounce off of it, or move through it very, very quickly. So those are your areas of support and resistance. So let's take a look at a picture that depicts all of this. So again, we have the balance. That's the entire distribution. We have the value node, which is the 70% area of all the volume that occurred within that balance. And we have the POC, the point of control. That's the highest point. And often you will see price when we're looking for, when the market is searching for value and moving up with a very strong trending move, is usually moving from one point of control to another. It goes, and then it hangs out and then starts auctioning. And then once it's found that area, it will tend to move up and down throughout that entire balance, mostly inside the value node. And from that, we can make very, very educated trades with a great risk to reward scenario. Because if we know where it's hanging out 70% of the time inside that balance, and we know where the extents are, and we know where the volume wells are, then we can say that, hey, if it comes up to that volume well and it has a strong likelihood of reversing, we can put a stop right over that with very, very little risk and then take a nice big trade. I mean, that's fundamentally how it works. There are other ways that we can analyze the individual balances over time, too, to identify trending or consolidating or other types of patterns in a larger time frame. But all of this is really the exact reflection of the auction process, which is, in essence, the market sentiment. That is the essence of Volume Profile. And I'm going to start putting together a series of courses or seminars. And they're going to be online seminars. Unlike the other guy, he has these in-person seminars where he charges you an arm and a leg. I'm going to charge much less money. And I'm going to teach you this process. I'll also show you the other traditional indicators that you can use as reference, but I'll show you why they are inferior and why Volume Profile is the superior method. And, well, look, what it really comes down to is performance. If you've been following my channel, then you've probably watched the calls that I've made. I started out back in September of last year. I've called every single high and low and major move that this market has to offer, on the money. Sometimes I may have been off by a couple of days, but still on the money. That is the proof. And that is also the showing and the dedication, showing that I have skin in the game, and I mean what I say. I'm only going to put information out there, content out there, if I think it's relevant to you. I'm not going to go out every day and just put out crap because I feel like that's the best way to bring in subscribers. Get skin in the game, buddy. Without skin in the game, you're nothing. We're here to make money. We're not here to flirt around for some unknown mission because we love the technology. We love to evangelize things that we really know nothing about without understanding what the market is all about. We'll see you next video.